All right, hey everyone, welcome back to the deep dive. And today we're going to be tackling this recent analysis of the S&P 500 E-mini futures. And I know you guys have been following this market really closely, and you want to get a grip on what's happening right now,
Yeah,
and what might be coming next. So
exactly.
let's dive right in.
So we're taking a look at a 1 hour chart here, which gives us a pretty detailed view of the recent price action.
Okay, so um, I think maybe before we get into the specifics of this chart, could you just give us like a really quick rundown on futures, just so everyone's on the same page? What they are, why traders use them.
Yeah, of course. You can think of futures like a contract. You are agreeing to buy or sell some asset. In this case, we're looking at the S&P 500 at a specific price on a future date. So you're essentially making a bet on where you think the price will be at that future date. Some people use them to speculate, hoping to profit from those price movements, but a lot of big institutions use them to hedge their portfolios as well.
Gotcha. Okay. So, I mean, just zooming in on the chart a little bit, we've had quite a run up lately, huh? I mean, the price went from about 6,030 to 6,130
hmm
before pulling back a bit to the 6,120s. What kind of jumps out at you when you see this? Like, what's the first thing you notice?
Well, that rally was pretty impressive, especially considering the volume that came in with it. That tells me there were some serious buyers behind that move. And when you see high volume like that, it often means that the big players are getting involved, like institutions.
Right. And I'm also noticing there's this green rectangle highlighted on the chart here. It's between about 6,030 and 6,050. And it's labeled as a possible support or accumulation zone. What's the significance of that area?
So support zones are areas on the chart where the price has historically bounced back from. It's like a floor for the price. In this case, it looks like a lot of buying happened in that zone, during that recent pullback.
So potentially, if the price were to dip back down to that level again, we could see buyers step in and kind of push it back up.
Yeah, exactly. It's definitely something to watch for sure. Now, a bit higher up on the chart, we have another interesting area. It's around 6,110 to 6,115, which is marked as potential buys. It's kind of curious to me that this level's been highlighted because it didn't really act as support during that recent pullback.
Right. Yeah, I see that. It kind of like touched that level briefly, but then it quickly bounced back up. We didn't really see a strong test of that level as support.
Yeah, yeah. And what's even more interesting is that before this recent rally, that 6,110, 6,115 zone actually acted as resistance. So the price kept bumping up against it, but it couldn't break through.
Okay. So we've got this level that kind of flipped from resistance to potential support. Now
Yeah.
that seems pretty significant.
Yeah, it does. But it's important to remember that support and resistance levels aren't always, like exact points. They're more like zones, they're areas. And how the price actually behaves at those levels, especially the volume, can give us some really good clues about the strength of the buyers and sellers.
Right. Okay, that makes sense. And I guess speaking of levels, we do have a couple other levels marked on the chart here too. We got that first support zone down around 6,030 to 6,050 that we talked about. Then there's the 6,100 to 6,110 zone, which, you said it's been both support and resistance recently. And then, of course, we got that resistance up at the recent high of around 6,130.
Right, yeah. So think of those levels as potential battlegrounds between, the bulls and the bears. The bulls want to push the price higher, the bears want to push it lower. And those marked levels are where those battles are likely to be fought.
Okay, that's a really helpful way to visualize it. Now, I'm also noticing this blue and purple line on the chart here. Is that a moving average? And it looks like a price recently crossed above that. So
Right.
what is that telling us?
Right. So that's the 20 period moving average. It's a pretty commonly used indicator. And when the price crosses above a moving average like that, it often suggests that the momentum is shifting to the upside, that the buyers are starting to take control.
Okay, so potentially like a bullish signal.
Yeah, it could be. But again, it's just one piece of the puzzle. We really need to look at it in conjunction with, other signals like those support and resistance levels we talked about and the volume.
Right. And speaking of volume, you mentioned earlier that the volume during that rally was pretty significant. Are there any other kind of volume patterns on this chart that stand out to you?
Yeah, there's a couple. So first, notice that the volume spiked when the price broke above that 6,110 to 6,115 resistance zone. That's a pretty classic sign of conviction from buyers. They were willing to step in with real money to push the price higher.
So not just kind of like a little nudge, you know, it's like
Right.
a real push.
Exactly. And then look at what happened when the price pulled back to that same zone. So the volume was pretty high there too, but the price didn't really break down. So that suggests to me that there were a lot of buyers waiting to, scoop up that dip.
Right. So even though we saw that price dip, that high volume is telling us that buyers were still interested.
Exactly. They saw that pullback as a buying opportunity.
Okay. Okay. I'm starting to see how the volume can really add like another layer of insight here.
Yeah.
Now, there's one more thing on this chart that I want to ask you about. It's that oscillator at the bottom. It changes colors from green to red, and there's some X's and triangles marked on it. What's going on there?
So that's the MACD. It's another momentum indicator. And, when the MACD line crosses above the signal line, that's what those X's are showing. It's generally considered a bullish signal. And when it crosses below, like those triangles, it's a bearish signal.
Hmm.
And the green and red bars just show the difference between those two lines, giving us a visual representation of the momentum.
Okay, so green basically means like bullish momentum, and red means bearish momentum.
Right. And notice that the oscillator turned, strongly green during that rally, which, confirms what we saw with the price and the volume, but it has started to cool off a bit since then. It's turning, less green.
Okay, is that a cause for concern?
It could be. It's something to watch closely. It could be an early warning sign that the momentum is starting to shift. And remember, oscillators like the MACD are leading indicators, meaning that they can sometimes signal changes in trend before we actually see it in the price action.
Okay, so this kind of cooling off that we're seeing in the oscillator, it could be a hint that maybe the rally is losing steam.
Yeah, possibly, but we really need to look for confirmation from, other signals, like a break below that 6100 support level or a decrease in buying volume.
Right. Okay. So I mean, we've got this really interesting mix of signals here. You know, some are bullish, some are potentially bearish, and it seems like the market's kind of at a bit of a crossroads here. So let's talk about how you, as a trader, might actually approach this type of situation. What are some potential like trade setups that you see based on everything we've talked about so far?
Okay, well, let's start with the bullish side. So if you're thinking about going long, that is betting that the price will go up. One approach would be to wait for a pullback to that 6,100 to 6,110 support zone. If the price holds there and we see some bullish confirmation signals, like a strong bounce off that level with increase in volume, that could be a good entry point.
Okay, so kind of like a buy the dip type of strategy. But what kind of like confirmation signals are you specifically looking for, you know?
Well, besides the volume, I would want to see a bullish candlestick pattern, like a hammer or a bullish engulfing pattern. Those patterns, suggest that the sellers were in control, but then the buyer stepped in and pushed the price back up.
Gotcha. And what about that oscillator? Would you want to see it like turning green again?
That would definitely be a plus. It would suggest that the momentum is, shifting back to the upside, but I wouldn't necessarily wait for that. Sometimes the price action itself is enough confirmation.
Right. So basically a pullback to 6,100 with like a bullish candle and strong volume, that would be a potential long entry.
Mm.
What about if you want to take a more like aggressive approach? What if you want to get in on the action a little bit sooner?
So in that case, you could consider a momentum buy. If the price breaks above that recent swing high of 6,130 with strong volume, that would be a sign that the bulls are really in control and the rally's likely to continue.
You'd be basically like chasing the breakout. But that seems pretty risky. Like what if the breakout fails?
It is riskier, for sure. That's why it's so important to wait for confirmation. You don't want to jump in too early and get caught in a false breakout.
Right. Okay, I see what you mean. Now let's flip the script and talk about like the bearish side of things. So what if you think this rally is kind of running out of steam?
Right. Well, one way to play that would be to short the market. If the price breaks down below 6,100 and then retest that level from below, if that level flips from support to resistance, it could signal that the sellers are starting to take control.
Right. So you're basically betting that the breakdown is for real and the price is headed lower.
Yeah, right. And again, you'd want to look for confirmation from the volume and candlestick patterns. A high volume breakdown with a bearish candle. That would be a pretty strong signal.
Okay, got it.
Yeah.
And is there another like bearish scenario that you see?
Yeah, you could also consider shorting near that 6,130 resistance level if the price fails to break through. and that oscillator, keeps flashing red, it could mean that the bulls are losing steam and a deeper pullback is on the horizon.
Gotcha. Okay, so we've got a couple of potential long setups, a couple of potential short setups, but I think before anyone runs off and starts placing trades, let's talk about risk management. How to protect yourself if things don't go your way.
Right. That's crucial. You always want to have a plan for what you'll do if the trade goes against you.
Mm.
So the first step is to set a stop loss order. That's an order that will automatically sell your position if the price drops to a certain level.
Right. So it's kind of like a safety net.
Exactly. It helps to limit your losses. And just as important is position sizing. Don't put all your eggs in one basket. Only risk a small percentage of your account on any single trade. That way, even if you have a string of losses, it won't wipe you out.
Right. Yeah, that makes a lot of sense. Well, you've given us a lot to think about. Any final words of wisdom for our listeners before we wrap things up here?
Yeah, just remember that, trading is a probability game. You're never going to be right all the time. The key is to have a solid trading plan, manage your risk,
Yeah.
and be patient. Don't chase trades, wait for the setups that fit your strategy, and then execute your plan with discipline.
Awesome. Great advice. So to recap here, the S&P 500 E-mini futures are at a pretty pivotal point right now. We've got some potential bullish signals, some potential bearish signals, and the key will be watching how the price reacts at those key levels that we talked about and paying attention to the volume and the momentum indicators. Well, thanks for breaking it all down for us. I really appreciate it.
Yeah, you're welcome. It's always a pleasure to dive deep into the markets with you.
And thanks to everyone for joining us on the deep dive. We'll see you next time. Okay. So we've got this level that kind of flipped from resistance to potential support now. That seems pretty significant.
Yeah, it does. But it's important to remember that support and resistance levels aren't always, like exact points. They're more like zones,
Hmm.
they're areas. And how the price actually behaves at those levels, especially the volume, can give us some really good clues about the strength of the buyers and sellers.
Right. Okay, that makes sense. And I guess speaking of levels, we do have a couple other levels marked on the chart here too. We got that first support zone down around 6,030 to 6,050 that we talked about. Then there's this 6,100 to 6,110 zone, which you said it's been both support and resistance recently. And then of course we got that resistance up at the recent high of around 6,130.
Right, yeah. So think of those levels as potential battlegrounds between, the bulls and the bears. The bulls want to push the price higher, the bears want to push it lower, and those marked levels are where those battles are likely to be fought.
Okay, that's a really helpful way to visualize it.
Mhm.
Now I'm also noticing this blue and purple line on the chart here. Is that a moving average? And it looks like the price recently crossed above that. So
Okay.
what is that telling us?
Right. So that's the 20-period moving average. It's a pretty commonly used indicator. And when the price crosses above a moving average like that, it often suggests that the momentum is